Hello, everyone. I hope everybody can hear me. Thank you for joining today's webinar. My name is Valdete Berisha, and I manage the Microfinance Gateway. We launched the Gateway webinar series about 4 months ago, and since then we've hosted 3 webinars with over 450 attendees. So we're really happy to see such great interest in attending these presentations. Our objective with a Gateway webinar series is to enable practitioners to share lessons, tools, and research related to financial inclusion so that we can continue to learn and improve upon our work. Today's webinar is the final webinar in a series that we have organized in partnership with a risk management initiative in microfinance. And we'll continue to bring you more interesting presentations in the future and hope that you'll be able to join us as well. Before we begin, I would like to remind everyone that this is an audio broadcast. So what that means is that we will receive questions from attendees via the chat box. Just because we expect a large number of attendees to join, we will be unable to allow microphones for everyone to ensure sound quality. So I would appreciate if you submit your questions using the chat box located on the right-hand corner of the screen. And the moderator, Sound Park, will collect your questions and ask them at the end of the presentation. So I think that's all on my side, and I'd like to give the mic up to Sound. Sound?
Yes, Valdete, thank you. Well, I just want to say a big thank you to you, Valdete, and your team, and of course, Microfinance Gateway for hosting these amazing webinar series. I also would like to welcome everyone. It's really exciting to hear the numbers of all the participants that we've had over the risk management series webinar that we've had so far. I also can't believe that it's as Valdete said, the last webinar that we're doing in the risk management series. For those joining us for the first time today, my name is Saun. I have been moderating the webinar series in risk management, and I'm also principal consultant with Magpie Venture, where we provide business consulting and executive coaching services directly to microfinance institutions around the world. Before wanting to give you a review of some of the previous webinars that we've done, Valdete, I was wondering, is there an audience poll that we could do to see where everybody is from and what roles that they are coming from?
Yes, I'm actually just open the poll now, so I would appreciate if everyone responds.
So yes, what we have here is a poll question of what is your role? We would just like to get an idea of where you're coming from and who our listeners are here today.
So are you able to see the results?
Unfortunately, I'm not. What I'm seeing is the poll questions at the moment.
Okay. So we'll give everyone a couple more minutes, and then when I close it, you'll be able to see them.
Okay.
Okay, I think everybody has responded.
All right, now I see the results. Fantastic. So we have 38% who are consultants, I think, and 29% in probably some other type of a role. Do we have another question available, Valvite, in terms of geographic region that you represent? Great.
Yes.
So what is the primary region you serve?
Okay, I think we have everyone.
We just got a comment that says Africa seems to be missing in the poll. I'm unable to see the poll question. Let's see. Valvite, are you able to verify what our participants should choose if they are in Africa?
Yes.
Okay.
Okay. There was the last option was not recorded, so I appreciate if everyone resubmits this answer again. Okay.
Great. Thank you. I love doing these polls. So great to see many of you joining us from really all over the world. So I wanted to provide a quick review of the previous webinars. We've done 3 of them previously, and we kicked off the webinar series with our first webinar, really discussing some of the industry-wide challenges to risk management, particularly from an independent rating agency's perspective. We had Microfinanza as one of our speakers, and we highlighted what solutions RIM is providing to address these challenges that were discussed. We also heard a testimonial from Access Holding, which is a network of financial institutions. We spent some time talking about what is risk management and what is good and appropriate risk management in this financial inclusion industry where we serve the double bottom line. Then the second webinar, we went over RIM's practical methodology that's been designed to be implemented by technical assistance providers and consultants. We heard from a microfinance institution in Zimbabwe called Untu, and the progress and the changes that they have experienced in risk management and their strategic growth since implementing this methodology. We also heard from a banking risk expert viewpoint on how RIM's the developed toolkit and the training around the methodology has supported his work with microfinance institutions. Then we continue the conversation with our third webinar, which was just about a month ago. And here we heard about RIM's methodology and process again, but this time really designed for internal assessors, meaning self-implementation by the financial institutions themselves. And we also heard a bit of the on-the-ground experience from Egypt, represented by Alexandria Business Association, ABA, which is one of the largest microfinance institutions there. And we heard about some of the shifts that ABA has seen in their strategic planning and the discussions that has gone through while really being able to integrate risk management. So if you missed any of those, please just go to the webpage of the webinars for all the video recordings of the presentations and slides and all other resources that's been provided by the speakers. If you will, like the past 3 webinars, really we've been looking at where have we been and what can we do now. And today, we want to take this conversation to the future. What's next? So before handing over to Kevin to really open us up and elaborate on our topic today, for those of you who don't know, as you see on the slide here, Kevin Fryett on the right, he is the director of RIM, Risk Management Initiative. We also have the privilege to hear from Craig Conrad in the middle. He is the CEO of PRIMIA, which I believe stands for Professional Risk Managers International Association, which we'll get to hear more about today. Today's webinar is going to be in a format of a conversation between Kevin and Craig. And my hope is that we take away a sense of a framework for really raising the bar in professionalizing risk management in financial inclusion world. As Valdete already reminded you, please do type in your comments and questions all throughout the presentation in the chat box, and make sure you send it to all participants so we can all see your questions, and I'll be taking those during the Q&A session at the end. So I'll be handing over to Kevin now.
Great, thanks, Soan. And good morning, afternoon, and maybe even evening for some of you joining us. I think before we get into it with Craig and I wanted to just take a couple minutes, and for those of you who maybe were not on our previous webinars, to just kind of take a step back and try and frame this conversation in the midst of where the industry is at, some of the challenges that we face, and really where the industry is going. And because I think that's a few years ago when we developed the graduation model, a lot of these issues were sort of at the forefront of our minds when we were jumping into that process. And I think many of those still exist today, and I think some of them and many of them are relevant into the conversation of where do we go from here. But I think if we were to take a step back, I think it would be a fair statement to say that our market's maturing. I think from where it's been, I think depending on the different market you're talking about, it's either we're seeing this through increased competition, through consolidation, through a number of different factors. And I think what some of the issues that we've seen is that as this maturing process happens, risk management within institutions is not necessarily keeping up, and it's maybe lagging. I think maybe is one of the misconceptions that I've heard quite a bit in terms of, well, my institution is a Tier 1 institution, therefore, or I invest in a Tier 1 institution, therefore, like the assumption is that they must be doing good risk management if they've gotten to the point that they have. And I think that's a misconception in many cases. Some of the issues I think that went into developing our graduation model, and for those who were not on the previous webinars, this graduation model that I talk about is a standardized risk management framework for institutions at different levels of organizational development. So the idea behind it being, as your institution grows and sophisticates, the risk management systems, structures, and practices that exist within your institution need to adapt in line with that, rather than, I think, what in general terms, what we see a lot of today is maybe crisis happening, and then us coming back to the drawing board to say, okay, what do we need to put in place so that doesn't happen again? So in all of this, whether it's, and I've put a few of these kind of issues up here, and there's, I think, a lot more that we could include here. But whether it's a lack of data in the industry or at the institutional level, whether it's a difficulty linking sort of the strategic elements of risk management with the very tactical elements, I think these are all things that play into the issues that we see today. But what we've done in our graduation model is try to address a number of these, where if it's from a data perspective, I think the general, what you'll generally find in our graduation model is it really moves from a more of a, let's say, a qualitative type of approach in our Tier 3 element of our framework, and moving more to a more quantitative approach in the Tier 1 part of our framework. And it's really to get practitioners on the curve, if you would, of risk management, and sensitizing them, gaining confidence of practitioners to then be able to kind of move up the spectrum of our framework as their institution grows. So there's the issues in the framework, or the issues in the industry. There's our graduation model framework, which I believe has addressed and is currently addressing some of these issues. But I think what we still see is a pretty big skills gap. And I'm happy that Craig's with us today, because this is really what Premia's specialty is. But whether, I think in our industry, whether it's a statistical skills gap in when you're moving up and getting into more quantitative approaches, whether it's the analytical side of skill sets that maybe isn't there because we haven't necessarily been trained in that way, or we're getting into more financial modeling and the analytics around that is something that's new to us, or if it's really linking those analytics to then real decisions. Like, how do we make conscious decisions that serve our business well, and from a perspective of risk management, and how do we ensure that our function is really set up and designed in a way that it provides this independent nature that we would all sort of strive towards in our risk management function. But I think as a result of all of this, there's less effective risk management that's happening. There's a lot of, I think, confusion in terms of what institutions should be doing, and our proposition is that the graduation model addresses some of that. But in terms of moving beyond kind of the current reality that we're in and moving towards, as the industry matures, really professionalizing risk management, creating a profession for it, let's say, in the financial inclusion space, this is really, I think, what Premia is set up to do, and I know they've been doing this in the traditional financial sector for a while. So Craig, if you'd mind just sharing a few words about, obviously, what is Premia, what do you guys do, and how does this fit into the conversation?
Well, Kevin, thank you very much. I'm delighted to be here to speak to the community and share a little bit about Premia, but also to talk about how we can continue to move the risk management forward in financial inclusion. Premia is a global member organization. We are very member-led and mission-driven around supporting a risk management network. The network itself is the steward of best standards. As Kevin said, for the more traditional financial organizations, including asset management firms, banks, insurance companies, we reach out to our community ways. We have in-person offerings and online learning and development. It is really focused on which is our core area. We lead that with a credential known as the Professional Risk Manager Certification. This is really something that goes to that someone has knowledge, but in fact they can demonstrate that they know the knowledge. We also do other programs such as certificate type programs, education. We have 45 chapters around the world, and that number continues to grow. But our core area is that network. It's bringing individuals to experience, and through those shared experiences to move the profession forward. Like many in financial inclusion, to something that Sayun said early on, the Premia, like you, serves a double bottom line. We have a requirement from our board to develop resources to invest back into our community so that our members are competent for the future challenges that face practice and their industries. But also we have a mission to serve, which is to establish sound risk management practices. Predominantly, again, as I said, financial institutions such as banks, asset management, and insurance companies, but delighted to be now working in the financial inclusion space to help promote and grow the profession here. We are very similar to RIM in our makeup, in that we have players from different sort of sides of the profession. We have practitioners, we have regulators, and we also serve consultants and others in the broader capital market space. One of the key things to talk about here, we talk about professionalizing a function, is a viewpoint of the globality of the skill. And certainly in the area of risk management, that is something that can be seen in any stage, whether you're looking at a sort of development model or you're looking on to other practice views. There's certainly elements that are across regions, and these are irrespective of a regulatory or prudential requirement. Certainly when you bring those in, there are differences. There are change, but ultimately risk practice should be similar and consistent around the globe. Additionally, those skills can be applied across the organizational functions, as well as the industry and regions. Again, from that perspective, that once you demonstrate that you are following and applying complex practices, these spread out, whether it's a financial risk category, an operational risk, if it's strategic or tactical, but ultimately to deliver on that organization or your organization's objectives. Additionally, one of the key areas of risk management is to offer security and soundness that builds confidence in stakeholders, whether they are the consumer, the customer, your funding source, whether that's investors or others, then that is the group that to be looking at. The other area is around appropriate certifications for financial inclusion, and how this certainly a way to be proactive with regulators. Many of you around the globe. Yes?
I'm sorry to interrupt, but I'm not sure if everyone is experiencing this, but your sound is cutting off a lot.
Okay. My
is it okay to call your phone? I can conference you into the WebEx session. it might be the internet connection.
My apologies. I'm not sure where I got cut off there, so I will. Is it any better now?
It's only I will only be able to tell when you start talking full sentences and a few sentences, because it doesn't cut off right away. But can you, if you will allow me to call you on your phone, and we can see if that works?
Please do, and my apologies, everyone. I'm unfortunately at an airport, so I will be reconnecting momentarily.
Okay. Well, you can stay on the session, and I'll just call your phone number. If you can share the phone number through the chat, just privately, that'd be great.
Okay. So the back though to the use of the certification as a way for financial inclusion organizations to be proactive with regulators. Certainly, the element of demonstrating knowledge, but also competency at an appropriate level, certainly whether you're looking at a graduation model or not, still a viewpoint that there is a need for these organizations from a regulatory perspective or prudential perspective to operate in mind and without creating too much instability within a financial system. So to be able to do that, it also means that you have to demonstrate that the individuals within an organization, as well as within a practice, are putting best efforts forth toward that soundness and security. So that's what regulators look at. And I know many on the call may be in areas that don't have a high regulation, but this is certainly the same thing that comes when you're talking to funding sources or you're engaging others in the broader area of community financial inclusion, that best effort put forward towards soundness and security does give you credibility. It demonstrates that you are attempting to serve your mission, you're again serving a double bottom line, with the broader perspective of your customer and your mission in mind. Additionally, for consultants, I know we have many that added credibility comes into play with your client. It demonstrates to your client that you are following best practices and certain those best practices to use in a given program. One moment, let me join the call via the phone. Hello, is this better? Yes, it is, Valdete. Okay.
Can you hear me?
Can everyone hear me now?
I can.
Very good. So my apologies, everyone. The whole purpose of my goal was not to be at an airport, but unfortunately that's what tends to happen when you are running a global organization. Anyway, so back to the point about consultants, that certainly that added credibility when you're serving your clients, but when you're building programs for them, and a regulator is coming in and asking for all of the things that they ask, when you are able to demonstrate that you have met some certain standards, you as the consultant have greater credibility and greater value in this whole chain. And finally, a certification really does allow that benchmarking toward other global standards, whether you're benchmarking your staff at any point in their journey, you have a method by which to do that. With that, I will now open up to a conversation with Kevin. I know we have talked a little bit in conversation, but as I was listening to some of the replays, Kevin, of the other webinars, it did sound like there was some, I don't want to say resistance to a risk function in financial inclusion in MFI organizations, but certainly there was a question as to what the value is. what do you, from your perspective, what do you see as the value there, and what are some of the risks that are coming into focus for MFIs, particularly as they grow, to help support the need of the function?
Yeah, no, I think that that was something that has been, I think, brought out not only in this webinar series, but something that I've run into personally as well as other colleagues as well, is this sort of question of, okay, like maybe that I think there's maybe a general sense of maybe my function isn't living up to what it should be, and there's maybe some cynicism there. And I do get the question of, like, how do I justify kind of the investment that is either proposed or really the development of my function, when even right now I'm not seeing the benefit of it. And I think going to your question about, and I think about the types of risks that are maybe coming into the sector as well as the justification for it. I think one of the issues that we face with, I think going back to some of the issues that I discussed on a few minutes ago, with just a lack of quality data, I think plays into a lot of that. Being able to quantify things, I think from a double bottom line is even more complex, because if we want to start quantifying the social side of our mission, I think this is something that many institutions don't do very well. But I think if we were to look beyond, even beyond that, to go back to your question of what types of risks are coming in, I think if you look at this sort of thing that we call fintech, I think beyond just this conversation, I'm part of the Axion's Africa Board Fellowship Program, and we have a number of conversations there every time we meet about sort of the risk of fintech to our industry. And I think the risk there is not necessarily, let's say, I think another way of framing it is saying, like, how do you quantify being out of business? The risk is kind of, it's a risk to our entire business model itself. So I think there's things that are happening in our industry that where we were to look forward, we could honestly say to ourselves, will we even be around 6 months from now, 2 years from now, 5 years from now as a business model? And I think certain markets are seeing some of that pressure, and I think that when we get together with that program with CEOs and board members, I think the general sense in the room is that fintech is on our doorstep, and we generally don't know how to respond. I think that seems pretty clear in the conversations that we've had. But I think that then I think the question is then, okay, in support of a risk function, why should we justify? I think, how can we justify? I think one simple one is we may be out of business. It's a very simple element of it. But I think in other markets where maybe it's the fintech entry is a little bit slower, I think even as we move up kind of the continuum of our organization's life cycle, like I was involved in an asset liability management program for a number of years, and in that respect, it was really around trying to quantify balance sheet risk and being able, and I think from an ALM perspective, that one's a little bit of an easier sell because it is relatively easy to quantify versus some of these kind of grayer areas. But I think kind of trying to tie this into what is good risk management, and I think the link between both kind of the tactical decision making, if it's from a balance sheet risk perspective, then we're trying to understand kind of how we're performing against kind of a risk appetite from a liquidity perspective, or FX or interest rate risk, etc. But from a more fundamental standpoint, like there's I think to do good risk management, we need to do both. We need to be looking at this strategically as well as kind of from the very kind of nitty-gritty, tactical, kind of everyday risk management.
Well, I certainly support that. I feel that when you look at the strategic, and I know some of the chat box is lighting up now with questions around this, when we look at fintech, the risk certainly is whether you're a going concern or not, but additionally, you have to look at the risk to the business model in other ways. Certainly, this is a natural progression. This is evolution of financial markets. But if you're not prepared, if you're not connecting your risk management function to the strategic, which I believe is really what we're saying about a lot of financial inclusion and MFIs, is that they're usually very strong and tactical, but when it comes to the strategic, meaning how do we serve either our mission and or our objectives, which is what do we want to be in 2 or 5 years, that is where risk management can have a strong play in the conversation, certainly with the board and through that as a proxy to the investment community or whomever is your stakeholder, that you are sharp and focused on how you are keeping the business sound toward that strategic objective. So I think there's certainly a lot of areas there to look at. And one of the things when you talk about other entrants on fintech, I know the game would be over if someone like a Google or an Apple or organizations like that who have huge social impact desires come out with new products and services as well. Partnering with them or being part of that category is generally not how they operate. They don't come in and open big arms, even though it sounds very like they try to be inclusive. They generally don't enter markets that way. They like to clobber and control. So that requires an organization to be out in front of its strategy, which means taking on new things, which means taking on the financial service or the digital services that will likely be part of that disruption. So, well, that leads on to another conversation in sort of where are we now? And you mentioned, Kevin, that there is dispersion across the skill sets. But is there a sense of how the MFIs currently spread across the different tiers within the graduation model?
I think, yeah, like if I was to just sort of as a rule of thumb, I think what we're seeing is, or what you typically see in a stereotypical microfinance market is, you generally have kind of, let's say, for a lack of knowing exact numbers, let's say the top 5 institutions in any given country may be sort of tier 1-ish, tier 2 institutions, not from our graduation model, let's just say from a size perspective, from a balance sheet perspective, and let's say the number of clients they would have. You generally get a small number of large institutions who are capturing a lot of the market, and then a high number of smaller institutions whose outreach is a lot less. But I think in terms of the issues that they face, the resources that they have to tap into, I think many of those larger institutions you would see connected to international networks, maybe part of a larger kind of holding structure, and for those folks in that reality, there is kind of a deeper well to sort of draw from when it comes to shared experience and skill set and systems and standardization and all this sort of thing that you would kind of lump into that basket. For the other institutions who maybe that isn't the reality, is there isn't a lot of that. There's a lot of I think from a skill set perspective, you'll see movement, I think, in a couple different ways in the industry. You'll see movement from smaller institutions to larger, this is labor movement from smaller institutions to larger institutions, because they can either work in a more professionalized environment or get paid a higher salary, or it's career progression that they didn't have in their old job. But then you'll also see movement from kind of higher tiered institutions into lower tiered institutions, because the risk manager at large institution X is now maybe becoming the CEO at a smaller institution. So it's sort of this circular kind of movement of labor and skills, which I think plays into an interesting dynamic when we then start talking about kind of what are the issues that all these institutions face. I think one of the other sort of realities is that a lot of this risk management skill set in and of itself is coming from the more sort of traditional banking environment. And I think I've run into it myself where I was looking for a specific skill set, but I think there's when we talk about our double bottom line, I think that sort of reality then flows into how we hire staff, because you may find a technical skill set that came out of a bank, but the softer skill set of do I have the kind of the soft skills to operate in a microfinance institution environment versus kind of the more professionalized environment that I faced, or that I was a part of in the banking world. I've run into challenges, and I've talked to a number of different CEOs of microfinance institutions when they're looking for risk managers facing the same thing, and the question is, where do we get these skills from, I guess. So yeah, in terms of I feel like that's sort of where we're at in terms of skill set, where the skills are coming from, how they sort of migrate around the industry over time. And I think you'll end up seeing that in institutions where the risk manager from top-tiered institution comes to be the CEO of small institution. A lot of that knowledge, policies, tools, all of that stuff comes with them typically. So you'll find this very kind of robust set of policies and risk management tools, et cetera, in smaller institution, which probably doesn't need anything close to being that sophisticated, and in reality, nothing is really used. Those policies aren't really used because they don't reflect the reality of the business. The skill sets internally beyond the one individual who brought it from this other institution doesn't really know how to use this stuff because it's maybe more sophisticated than what they're used to, and the skill sets in the smaller institution don't necessarily match up to. So there's a lot of, and I think it's sort of the natural process of the makeup of the industry. And I think, so given all of that, then the question is like, what would it look like? Like, where do we need to go? What would this look like to kind of bring a little bit more of equilibrium, if you would, I guess, into the picture? And I know you talked earlier about your role, Premia's role in certifications and this sort of thing, and maybe it'd be interesting to hear from you, Craig, like what does when we talk about building the profession, what does that really mean and look like in practice, I guess?
Well, it's certainly a good question. To serve many of the needs that face the industry strategically, whether it's because of a disruption or because in any maturing sector, new products and services come to bear, but to be, for us in financial inclusion, to be able to continue to meet the new challenges that are facing our consumers, are facing broadly how we find funding for what we're trying to do, we need to get to a point where there is an element of some standards that get identified. Certainly, many in the chat box have talked about some of the concerns or difficulties around governance structures and some of the commonalities there that again, don't exist because there's disparities in the regulatory environment that usually requires that. But in many cases, some of those funding sources may start to require it. So it may not be a regulator that's going to impose those things that are external to the function of risk, but it may come in for how you fund yourself or how you find that funding. So the way Premia has done it, and the founders of Premia many years ago were in an industry back at a time when there were not standards across banks. There were not standards across financial institutions. And in many cases, there were not standards across departments that had different risk requirements or different risks, such as a credit risk or a market risk. And certainly for some FIs, they're going to start to see market risk as they build book, but they also have some necessarily growing FX exposure and other types of things that come into the equation. But that's how Premia started, was at a time when there were not standards across the board. And many of these practitioners felt that as business people, as bankers, that their industry was not going to be able to handle the future as new instruments came to bear and changes in regulatory environment, whether it's a deregulatory or increasing regulation environment. That they needed to have a way to demonstrate that there is a standard there to build that confidence. And the key way that Premia does that is through deep study of the profession. And to do that, we build network. We bring practitioners together. As I noted, we have an audience that comes from many different perspectives, whether they are the practitioner in the role, the chief risk officer from a board perspective, or consulting a regulatory environment. They all come together to demonstrate what's needed across the profession. So that strong community is what we study. We build out credentials from there. We build education and framework from there that really takes a deep dive into what are the current practices, and certainly looking across regions and all that, but again, to the global need, digs very deeply into what is required to ensure that, in our case, in the MFI case, that double bottom line has exposure and a way to map back to what the risk function does. So there's been conversations around data, not good quality data. Certainly, you may have seen other firms fail, but what happens if the exposure is not large enough to cause the business to fail, but certainly create harm? There may not be a standard to know that now, whether it's through modeling techniques or connecting modeling to the skill sets required to be able to understand how to tell that story to both the board as well as the business as they try to continue to serve that double bottom line. So that's the predominant, the strong way that, or the way that we do it, is to build a community and then study the community. And through that, as you can see, the risk function is massive throughout many of the developing economies now, but if you look across the developed world, certainly strong. And that is likely going to continue as the major banks in the developed economies start to move their jobs into the developing economies. And whether that is an MFI function or someone who is coming from a financial inclusion risk management job and wanting to, as Kevin noted, transfer into another organization, you soon will see the HSBCs of the world not just moving their risk management back offices to Eastern Europe, but India, Asia, Africa. So the ability for someone to move through this, which is another element of a network, is an individual's career. That ability to move through industry and size of organization will be fully supported by having a professionalized approach and standards behind it. I am recognizing that we're getting close to being out of time here, so I'd like to turn it over to you so that we can get to questions from our participants.
Excellent. Thank you, Craig and Kevin. And we are having a very lively discussion in our chat box, lots of different types of questions that are coming in. And as you said, Craig, we are short on time. We have about 10 minutes remaining in our Q&A session. So I'm going to try to first ask you a question based on a couple of questions that have come in from our audience. And I think it's really bringing us back to the very basics. It was the first question that has come in. Really, what is the role of risk management? And are we hearing that, does it vary from really tier to tier and the environment that we operate in? And we speak a lot of data and systems and quantifying the skill set that is needed for risk management. What about other fundamentals of risk management? I think, Craig, you mentioned a bit about governance, and, we really haven't dove into risk culture, some of the internal controls. What are some other aspects of risk management that we really need to be thinking about as we discuss double bottom line risk management? So,
I'll
yes, please.
Sorry, Simon. I'll jump in, and then Kevin will have you share your views as well. I strongly believe that one of the fundamentals that is behind solid risk management, that other than the ones we've mentioned, which is the modeling capability and the understanding, the ability to evaluate an exposure, evaluate a risk, is business acumen, as well as the ability to tell a story. I know that sounds odd, but we talk about fundamentals, and I don't want to spend too much time on the focus of these other softer skills, but when I look even across some of the major risk management departments, they're very technically capable. That doesn't mean their organization is any more sound. One of the challenges they may have is an ability to engage the business who doesn't know our terminology in risk management. They don't understand the value at risk conversations and what our models are saying. They do understand their business. So I would add that above and beyond the ability to do the financial and the financial maths required to do risk management, is the ability to have the softer skills, understand the business, and be able to have dialogue with those in the business as well as those on the board without having to use the very technical conversations that are in risk practice.
Yeah, and I guess maybe just to add to that, and I don't think I'll get into the kind of the definitional understanding of what the risk management function should do, but I think going to your point, Craig, about the double bottom line and the soft skills, I think that is an incredibly important piece of it when we come to how RIM defines risk in and of itself, because then it obviously plays into how we kind of view the role of risk management. But I think deviating from a traditional sort of financial services definition of risk, which looks at it purely from a financial bottom line perspective, what we say is that, okay, we have two bottom lines. So risk is not only just the potential financial losses that you might have, but it's actually the risk to the social side of your business as well. And I think that side of it, and I mentioned this earlier, is not that well carried out, whether that be just a lack of understanding of what our mission really is, where maybe it's not very well articulated, and there could be a variety of other reasons why it could be that way. But I think that piece that you mentioned about the soft skills, to me, is I would throw that into the soft skills piece of it. Is like, do we really understand our mission, and do we know how to evaluate our mission? Are we achieving our mission? And And because I think when it comes into evaluating the social side of a certain decision, and whether we're hurting our social mission through a certain decision that we're making in a risk management conversation, if we don't understand or do a very good job in sort of, let's say, quantifying or articulating what our social mission even is, then we're really not going to have much of a success bringing that into the risk management conversation. So I think moving forward, that it's a challenge, because I think what I mentioned about a lot of risk management skills coming out of the traditional banking world, I think with that comes a certain way of doing things, but we're overlapping risk management from one industry into another industry, which has its sort of subtle differences, or maybe less than subtle differences, and which need to be treated differently. I think when we talk about an appropriate kind of framework, this is part of that word appropriate that I think we use very carefully to say appropriate based on the size and structure of our business, but also appropriate in the terms of it actually matches the industry that we're in. So maybe I'll just stop there and back to you, so.
Okay, great, thank you. And I see as you speak, Kevin, a comment that has come in really kind of sums it up as well as a function of it, which is really looking at risk management in between the back office and the front office. And I think this really goes to talking between the technical skills and the challenge of soft skills, and the emphasis on risk management really being a responsibility of everyone in the institution. So thank you for that comment. We also have another question, really elaborate question regarding RIM's model, and I realize that we haven't had the chance to really introduce to our audience regarding some of the resources that are available at RIM. So Kevin, could we perhaps show what resources that may be available for some of the practitioners that are listening in today?
Sure, and I think we, in previous webinars, we've discussed some of these, but in terms of what RIM provides to the industry, there's, I think, a number of different things. We could go back to our previous, I think, second and third webinar if folks are interested. But we've developed an assessment methodology on the back of our graduation model, which provides all of the resources that both an independent assessor would need to evaluate sort of the risk management functions of institutions vis-a-vis our graduation model framework, and there's a toolkit that's associated with that, and trainings that we're providing to practitioners on that as well, which I think maybe, Saun, if you can put the link up for the training events page for our website, that can help direct some of that interested folks there. We also have, like Craig mentioned, part of this, and our structures are very much the same in terms of bringing the industry together around some of these. We also have working groups that we provide to our members where industry folk, whether it's practitioners or risk management experts, et cetera, can get together to discuss. I think one of the ones that's currently in discussion is this issue of risk culture. So how do I, and I think to Moses's point in the chat box, it's a very valid point of okay, risk management is, we're talking about sort of comprehensive risk management, and there's comprehensive in terms of the types of risks that it covers, but then also the responsibility of risk management is not just some office next to the internal audit office way back in the head office that gets lost. It is actually a responsibility for everybody, and it starts from the board, and it cascades all the way down to frontline management, so and staff. So in terms of resources available, and I'm not somehow not able to switch the slide soon, so maybe if you can get to the next slide. Membership's also available for RIM, and I mentioned working groups. Working groups are open to our members, So we have membership for individuals, for organizations who want to engage in this conversation within the financial inclusion space. Some of those other resources, the toolkits that I mentioned for the institution assessment process, these are also available to members. We're giving a sort of a free trial version of our graduation model encyclopedia, which is what you see up in the top right corner there. If there's a couple ways that you can actually gain access to this. There's a survey right now that if you click yes to the survey, will get you signed up for that. So you can, it's a 30-day trial access to our graduation model encyclopedia, which is really a kind of the meat on the bones of our graduation model, to really understand what our model is looking for in each within each of its guidelines. You can also go onto our homepage of our website, www.riminitiative.org, and about halfway down on the homepage, you'll see an icon that looks very similar to exactly the same, to be exact, to what's in the top right corner of the screen now. And when you do sign up there, you'll have to include this RIM4 free 30 code. But if you don't want to do that, feel free just to respond yes to the survey, the poll question, and that will essentially do the same thing and get you signed up. And then I'll be sending some follow-up note to those who have signed up to then there's a little bit of an instruction manual that can help you through getting signed up onto our website. Does that answer that, Simon?
Excellent. Yes. Thank you, Kevin. And I apologize to all our participants today. It's already at the top of the hour, and I see that we're already 1 minute past. If you wouldn't mind staying just maybe 2 more minutes, I think, unfortunately, we won't be able to go through all the great questions that have come in, but I wanted to just conclude our webinar with final questions, really, as this being our last webinar in the series. First, I'll ask Craig and Kevin, what we have, as you saw earlier, different roles that's represented here today on the webinar. We have some donors, investors, and really microfinance practitioners from all over the world represented. Craig, to the donors and investors who really may want to continue and further this conversation that we've started here today on building risk management profession, if you will, and financial inclusion, what final words do you have for them? And I see your email address is here on the slide. Can they contact you, or what final thoughts do you have for the listeners today? And Kevin, after that, if you would just close us up with your final words, really for our microfinance practitioners. You've just shared a bunch of resources that are available. Any final thoughts that you'd like to share to those who want to implement and really lead in their respective regions and roles that they are in? And after that, we'll hand over to Valdete.
Well, Simon, I think to investors and funders, it's certainly important to demand a type of risk practice that demonstrates that organization is being wise with your resources, and that is something we certainly talked about the fundamentals, but certainly when we look at the graduation models, there are certain levels that we need to look at, but ultimately you have a social mission. You came to be because of a desire to serve, and your energy in that desire to serve will help us continue to advance this professionalism. So through that demand, you will help us move things forward. So contact me. We'll continue this dialogue. I certainly saw great conversations in the chat box that I would love to continue. So feel free to reach out to me, and we'll further that dialogue around your social mission and how we can support that. Yeah,
and maybe just from my end, I think some of what Craig is talked about earlier in our conversation with regards to developing community and the approach to professionalization and sharing experiences and the value in all of that. I think for me it points to a larger sort of piece, which is this is a long-term process. This is not something that happens overnight. I think that's been my experience, and I think it's rightly so. People learn from each other. People share experiences with each other in order to either not repeat the same mistakes that others have made, or to learn from the good things that have happened as well, and sort of take advantage of that and share our lessons learned and these sorts of things. But this stuff connecting people takes time. But I think those connections are invaluable when you can talk to someone across the table and they can share something that's running up against maybe something that you're dealing with right now. So in terms of, I would just encourage people, if you want to dive deeper into this stuff, send me an email. We can talk about working groups. If you're a consultant and you want to get trained up on our assessment methodology, feel free to contact me. We do have trainings coming up, one in Africa at the end of June, which will be posted onto our website very shortly. We also have another independent assessor training in Luxembourg. I think that was mentioned in the chat box in September. And then we're also at the Africa Microfinance Week for an internal assessor for the risk managers of the world, the CFOs, the internal auditors, et cetera, who may be the champion of this internally and want to kind of bring some of those skills in-house. So feel free to reach out to me on either of those. I'm happy to talk to you or introduce you to the folks who are leading that from our end. So.
Okay, thank you. Thank you to all our participants today for really lively participation. And as Kevin was saying, connection takes time, and I'm really glad to see that some of meaningful connections have occurred even just during these webinar series. And on behalf of all of us, thank you to our speakers today, Craig and Kevin. It was a really insightful discussion, and wish we had more time. I'm going to turn over to Valdete now to close us up.
Thank you, Soun, and thanks to the speakers. We're really happy we could host these webinars jointly and to see this great interest among participants. I just wanted to let everyone know that we will make the recording and related materials available in a couple of days on the microfinancegateway.org website. We will also follow up with an email just to let you know when they've been uploaded so that you can go and check them out. I would also encourage you to go to Microfinance Gateway and check out the previous 3 webinars which are part of this series, and you can listen to the recording and download the presentations there if you're interested to learn a little bit more about the tools and resources that Kevin mentioned earlier. In the meantime, I'll also invite you to join our LinkedIn group. I am going to post the link to our LinkedIn group on the chat box. Feel free to join and to continue the conversation there as well among each other. Obviously, the speakers are also open to contacting them directly, so we'd like to continue this conversation in as many forms as possible. So the LinkedIn link is on the chat box. The materials will come to you shortly in 2 days. And I'd like to thank everyone again for joining us and the speakers for great discussion.
Yeah, and I think just another thanks to you, Valdete, just for organizing all of this and being open to a 4-part series on risk management. It's been a lot of fun.
Great. Yeah, my pleasure. Thanks.
Thank you, everyone.
Thank you.